You ever wonder how well you're doing financially? There's probably a few things you do. One, you check your bank account. Two, you check your credit score. Those two things alone are probably going to make you get a feeling that usually tells you, hey, I'm doing well in life financially, or I can do better. I'm doing bad, or, this is excellent. I have no concerns. And since this is the It Pays to Have Good Credit podcast platform, we're just going to talk mainly about credit scores. Okay. I think the best credit scores that you should have are if it's above 750 or a zero. That may sound confusing, but in this episode, I'm going to explain why.
Yes, it pays to have good credit.
You would always want to be on the side of having good credit.
Do you think it pays to have good credit? All right, so for those who are watching or listening to this episode, you understand that having a credit score above 750 is good, but you're probably wondering, why did I say having a zero credit score is also good? So first, we must understand what are credit scores and what do they mean, okay? What do they mean financially? Well, first of all, credit scores tell you, or at least tell lenders and banks, how well you are on paying back the debts that you owe or the money that you borrowed. The more accounts that you have that you paid on time, paid off, paid in full, the higher your credit scores are, and if it's been a few years that you have been doing this, that means you have great history or a great background on doing things well. That means your credit scores are going to be 750, 780, 800, 850, whatever the case is. When you get to that 750 plus range, that means you probably never missed a payment, within 7 years. You've never been late. You never had anything go to collections. Therefore, your financial lifestyle is good. You have no issues making your payments on time, and you pay your bills on time. That's good. Now, okay, if you have a zero credit score, and I'm not just talking about a teenager or a young adult, I'm just saying, let's just say a person who's probably in their late 30s to 40s and older, okay? If you have a zero credit score, by the time you're over 35, that goes to show you that you're probably not using credit, which means you don't need credit, because clearly you're rich enough, or your financial standpoint is well enough to where you can pay cash for everything. Okay. So let's look at it this way. People use credit for certain things. Okay. It's to help them buy a house. Not everyone can just get up and buy a house cash. No one has $300,000 just sitting in their bank account, especially for the middle class. Bills, car insurance, all of these things, kind of affect things to where you can't save hundreds of thousands of dollars working a 40, 50, $60,000 a year job every single day. It's just not going to happen. You have kids, you have vacations, you have a little bit in savings you put aside. All of that cannot just simply go to a house purchase unless you save until you're 90 years old, and by the time you pass away, you don't really get to enjoy your home. Okay, so that's what people do with credit. They can use it to buy cars, they can use it to buy a house, they can use it to get a loan if there's any type of unexpected situations. There's so many things you can do with credit. Now, this episode isn't talking about those things I just listed: house, cars, vacations, all that stuff people finance. This episode isn't to discuss if those reasons are good or not to use credit on, because I don't agree with most of those, except a house or possibly a vehicle. But, this episode is just teaching what builds your credit score and what are some things that people do to build their credit score. So the main things are houses and cars. Okay. Now, I'm going to give my opinion on something. There's also people like me who may own a business and credit comes in handy, because there's a big misunderstanding where people think if you have good credit, that means you're in so much debt. You're making on-time payments, but you're still in debt. Because here's the thing: if you're in zero debt or you're not using credit, then your credit scores will be zero. Okay. So here's the thing. The only debt that I have currently is a mortgage. Okay. I use my credit every single month for business purposes. I have plenty of business credit cards that I purchase, business expenses with every single month. And the reason I do that is because I am not a billionaire and I care about getting the 2% cash back on every single dollar that I spend throughout the year on my business or my utilities at home. I have a credit card that I pay my utilities with. Okay. I am not Elon Musk. I am not a multi-billionaire. Therefore, my book, it pays to have good credit. I use my good credit to use debt to make me money. Now, these credit cards that I use for business, it is zero debt because here's the thing. When it's time for me to pay these bills for my business, I already have the money in my bank account to purchase my expenses or pay my bills. I just put it on a credit card and then use the money that I have in my account to just pay it right back off the next day or two, okay? Or at the end of the statement, I just pay it off, whatever the case is. It's not like I'm using my credit cards to hopefully I can pay it off or it's a way to finance my bills. No, I use it because I earn 2% on my expenses throughout the year. And that alone pays for free gas in my truck throughout the year. I don't have to pay for gas. Every month I'm getting like $60 to $80 back on like one of my smaller cards. And then the other card that I'm using, my main business card where thousands of expenses are coming out every single month, that can get up to $2,000, $3,000 a year in free cash back. I just did a podcast episode with a friend of mine that owns Down for Sound. And this guy is spending millions of dollars per month on his business expenses credit card. And he's earning $250,000 a year. It's free money. But yet again, I'm doing that because I am not rich for sure. And I can sure the heck use an extra $2,000 or $3,000 a year to pay for a vacation or $2,000 or $3,000 to fill my truck up with gas every month for free. I'm not rich. So that comes in handy. Same thing for him. He's making $250,000 per year on his credit card for free. That can buy vehicles, that can go back into the business, which he spends it on his family and friends and things of that nature, but it's literally free money. Now, going back to having a zero credit score, okay? If you're in your 30s, your 40s, or you're older, and you don't have to use credit, you don't have to borrow money, good. If you're happy like that, good. That's the goal. My goal is to eventually have a zero credit score. If I can become a billionaire or win the lottery some random way and I don't have to worry about a credit score, sure. But if I were to ever buy my next home, guess what? I'm going to have to unfortunately use credit to get a mortgage at a good rate and pay it off in like 10 years or so. But, it's just those are the things that I need to use my credit for and need to have a good credit score for. But again, it doesn't really matter if you have a zero credit score or if you have a 750 plus credit score. If you're a adult in this economy today and your finances are good enough to where you don't need credit, or it's good enough to where you have to use credit, you can, then you are in a good financial situation. Because there's some people today who don't have the money to buy something up front like a house or buy something up front like a car. They have to finance these things, but some people just can't because they have bad credit. Okay, so that's why I firmly believe the best credit scores to have are zero or 750 and above. Now you understand. If you use credit to improve your lifestyle and would like to share your story on the It Pays to Have Good Credit podcast, feel free to reach out to us at info@sturgiscreditrepair.com. Sturgis is spelled STIRGUS, creditrepair.com.